rampite.
Hello everybody, welcome back. So we're going to have a look at Bitcoin, a bit of an overview of altcoins, but we're going to focus on potential downside on this video. So yesterday was the potential upside, which is mostly driven on a fundamental basis. We can see the size of the move from the dump caused by the invasion, and reaching a peak around here back into this resistance zone. We've been here before, almost exactly before. Came into this zone, launched all the way up to the top, consolidated, or basically sold off, should we say, basically sold off. We came back down to that zone again on the invasion, had a very good reaction all the way back up into this resistance zone, and back down again we go. And so at the moment what we're looking at is holding in these medium zones. These are all just areas that have been forged out of the most recent area of price action. And so you'd like to see us hold on these 4 hourlies, but given the fact that we're below all major moving averages with no kind of divergence in play on the 4 hourly, that would be. We can have a look at the 1 hourly just for fun. 1 hourly is, well, it is what it is. It's not really showing any genuine attempt to bounce from these particular levels, although it could, and if it were to, everything points to 41,000 once again, which is more or less mapped on a variety of moving averages. We've got the centre of the Bollinger Band, the 21 exponential, more or less around 41 on the daily. And on the 4 hourly, this is where our 200 exponential is. It's also where the 1 hourly 200 exponential is. So a massive area of resistance building up around here. So if we were to nudge down again and again after that, 41,000, even in the very short term over this weekend, effectively, maybe into the beginning of next week, is going to be the major area of resistance. It's also this horizontal that we've got drawn in here, which goes back quite a long way. And in fact, it's such a long-standing support stroke resistance area that it is basically a line in the sand in itself, marking effectively the top over here of the parabolic move. So 41,000 being the main area of support stroke resistance that needs to either be reclaimed or respected. And on the 4 hourly, like I say, we've dripped down below this little. It was a kind of a very small hopium style chance that we would support there. We had wicks and bodies all dancing around this area since we retested it and broke down below it. It didn't care about it last night whatsoever. Didn't care about it, and it seems to care much more about the 38,500 zone, which again, had some relevance in the past, but I don't think it really is enough to hold it. So I would be probably looking for this to nudge down a little bit before we get some deeper drives of divergence on the smaller term timeframes. So with all that said, I mean, the bears have got control over majority of timeframes once again. Let's go back to the daily. We're not really going to talk about the bullish perspective so much on this video. We're talking about the bearish perspective because again, as we've been saying this whole time, the bears have got control over the larger term time frames, basically being the weekly. The weekly is a major area to be reclaimed if we're going to go bullish again, and we just need to reclaim this area, which is 48,500. that's your 20 weekly moving average, and that would suggest maybe a turn of events, maybe major upside. So I've been saying for a long time now that there are things outside of this chart which are going to play a major component as to which way this is going to go. Charts are all very good. They can be traded on the small term time frames. Futures trading is definitely possible with all of this. We've navigated our way from, I suppose, especially working out where this top is likely to be, and also where certain supports are also going to be. But if we're looking for spot trades and larger positions for effectively buying and holding, I haven't bought any more since I bought the 40,600 and then the $35,000 zone. This entire area bought out for me for spot trading. Not looking to buy any more until we see some major things happen outside of the chart. So it might be next week, or it's definitely this month. Mr. Powell will finally release some form of rate hike. He'll tell us what it's going to be. Doesn't really matter what it is. We just need to know what it is so people can base and build upon it, and see where we go from there. So again, forces outside of this chart giving us uncertainty, making this entire area pretty indecisive. And you can see just from the start of this move, it is indecisive. We're at the bottom, we're at the top, we're back to the bottom, we're back to the top. Are we going back to the bottom again? Well, we could, and if we did do that, we probably would break down. But we'd have to see, because again, uncertainty is the main source that we're looking to read on this right now, and that hasn't been given to us. It'll be given to us later on this month. Now, obviously, with all the things that have taken place in the world as well, this is why I was talking about the fundamentals behind this move. The hedge against inflation. All currencies are going to be inflated. It's just the nature of it. We've obviously seen what's happened to the ruble. You can see what's going on with the dollar, or should I say the Dixie, which is basically a bag of all currencies. We'll just bring it up now. So the dollar is obviously suffering inflation. We all know that, 7.5% last time we heard, but the Dixie's going up. So what does this mean? It basically means that all other currencies that are being pushed into this chart, which is basically euro, effectively the euro is getting hammered, the pound is getting hammered. It shows that the dollar is actually getting hammered to a lesser extent. So inflation is going to be rife across the board. How the Fed decide to deal with that is what I'm talking about when it comes to certainty. If you think about the dollar as a chart in itself, we are approaching this area basically just short of 100, which is basically where we would look for some kind of rejection. And a rejection on the Dixie usually corresponds to some form of upside for anything that's pegged against the dollar. So we're talking stocks, commodities, surprisingly, even more, and hopefully a bit of crypto, mostly Bitcoin. Remember, we're talking mostly Bitcoin when we're talking about crypto, because Bitcoin is the one which has this fundamental, I suppose, value-based commodity style, store of value involved in it, and altcoins just don't have that. Altcoins are more like, tech stocks, if anything. So we would be looking at a potential rejection from here. But remember, we've been talking for a while. This dollar chart, the Dixie is still bullish. It continues to be bullish. It's raging on. The dollar is basically a powerhouse as far as the Dixie is concerned. The real dollar, obviously, is going down in value, like everything else. And that's why I made that video yesterday, and I've been touting the idea of a fundamental reason to buy Bitcoin or to hold on to Bitcoin. It doesn't really matter particularly, I suppose, what the value of the Bitcoin is. And this has always been my theory or my game plan. Accumulate as much Bitcoin as possible through the use of alts or buying dips or strategic sells and buybacks. Not trying to get too clever, but just as long as you're just increasing the amount that you've got, so be it. Don't think too hard about what that Bitcoin is worth. Just try and accumulate as many of them as you can, really, for any means necessary. And Bitcoin has always been my balance. So, since 2019, I suppose, when I went in pretty hard and heavy, obviously, been scooping up and hoovering up a lot of altcoins, and then towards the peak of the last alt season, selling into Bitcoin. Arguably, you'd be saying, oh, you're selling into Bitcoin at its high and all the, but yeah, of course. The idea is that I want to increase the amount of Bitcoins that I've got, regardless of the price. I just want to bag those Bitcoins. So that is the overall theory, and I stand by it. But on a chart basis, you can't deny that it looks droopy, and with a droopy chart, it does offer further downside. So we're incoming death cross forming on that 4 hourly. A bearish engulfing candle effectively formed yesterday. Not engulfing, but it's not good. It's basically giving up everything that it had gained. And again, this goes to the idea that fundamental reason why it pumped and technical reason as why it dumped. So the fundamentals versus the technicals are basically having a face-off right now, which is making the whole indecision of which way it wants to go, or should I say more or less continuation probably of where it is going to go, which is probably lower. The lower it goes, though, the more appealing it becomes, not just to me, but to everybody else, when inflation is pretty much guaranteed, right? And I'm saying that it is pretty much guaranteed. While we're in this situation, inflation is pretty much guaranteed across all currencies. It's very hard to escape it. It was bad to start with. This whole conflict is going to make it harder to tackle it, and so probably the only real outcome is to allow it to allow it to happen, basically. Maybe deal with it in some really dramatic way when it reaches an absolute peak. It's almost like a battle of inflation. What currency is going to do, that is going to be affected the least, but that doesn't mean that it's not going to be affected to a large extent. So that seems to be the way that everybody's going right now. I know the Bank of England are still trying to deal with stuff, but I think it's in vain, given the problems that we all face right now. So that with Bitcoin gives a fundamental reason why you shouldn't get particularly worried about it over a longer period, but over a shorter period, given on these technicals, there's no reason why you can't get a fair bit worse. So let's have a look at where we are with this with this 3 daily, which is something we wouldn't normally look at. We're effectively still above a 200 exponential, which is fine, but we're below pretty much the centre of the Bollinger Band ever so slightly. We can't really look at this and say anything other than it's matching price action. It doesn't show any slowing of momentum, which is good. In fact, it's got hidden bullish divergence on the 3 day, which is actually okay. The weekly, though, like I say, we're below pretty much all major moving averages of significance. The only thing below us of any major significance is this 200 exponential, which could be where we end up going down to. I was saying on the live stream last night that charts are going to be very difficult, especially altcoin charts, when we're looking at everything for through the lens of a Bitcoin. And with Bitcoin, we were looking at traditional markets as well. So just a brief overview of that. I mean, yesterday was pretty devastating for European stocks. European stocks taking a big tumble. No big surprise there, because European trading partners effectively going to have a huge major reshuffle as they traded with Russia to a much larger extent than the US, and so it's all dropping off basically now for the European stocks. I think that in the short term, American stocks are quite insulated from this, having lesser reliance on Russia, but it will bleed into that eventually, I think. And so what we've obviously recognised, at least over the last 18 months, is that the Bitcoin chart, and effectively you could probably say the S&P, or more likely more so the Nasdaq. There's a lot of you could overlay those charts, and they do seem to have a lot of relevance to it. So if we're expecting the effects of European stocks to bleed into the way that American stocks are behaving, and then that to transpire into what Bitcoin's going to look like, we can entertain the idea of a much lower Bitcoin, probably coming down to at least these lower ranges here, about 29,000, where we did double bottom in the past, but maybe even a black swan event. And trust me, at the moment there's more black swans circling these charts than there are white swans. I was saying this last night. I mean, there's a flock of black swans out there. Just take your pick. And I'm not saying we should try and trade based on black swans, but there are a lot of them, and because of that, we should be extremely cautious about taking on any more exposure to crypto at this particular moment in time. Like I say, when a black swan is effectively looking to make a nest on your doorstep, and then another one, shit all over it. There's black swans all over the place, and so the good thing about black swans is that they do give you massively oversold areas, and you could look at picking those up just blindly, essentially, and you'll know when it happens, because you'll wake up one day and it'll be a 20, 30, 40% wick down. It'll take a little bit of time to recover from that, certainly, and it may even drip down a little lower before it recovers, but it would give you a massively oversold area to potentially take a decent opportunity in. But on a technical basis, let's turn the Ichicloud back on, and we'll see where we are right now. We're still within the cloud, so that's okay. We've not got any short signals developed on this Ichimoku cloud yet on the weekly, so that would, again, on a technical basis, give you a really big move down, and not a continuation down, but which obviously probably would go into a continuation of some form, but it would give you a short opportunity. Not that you would really want to short based on a weekly, but it would give you a signal that effectively we would be looking for a large stab down. And we've not had one of those in a very, 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 very long time. In fact, I've not really seen that before. You would normally play the inverse of that, where you'd get a long signal or a pump signal. And at the moment, we're brewing the possibility of one of those big moves down. So I talked about that before anyway. I've made a whole video on that signal. It's not yet generated, so we don't need to look at it any further. And obviously the monthly is a big deal for us here. We've come all the way back down once again to the centre of this Bollinger Band on the monthly, closing below here, whether it's the centre of this Bollinger Band or the 21 exponential, which is just a little lower at 37,600, closing a monthly below there would spark continuation. And again, we're looking at this area between 22 to 23 at the moment. We've got the 50 exponential moving average coming in at around 22 at the moment, and the 200 exponential moving average on a weekly coming in around about 23. So give or take $1,000. That's where whether it be a black swan, a monthly close, or a weekly short signal generated could take us. So yeah, the lower $20,000 zone could be where the overall destination for a potential bottom would be. And we're talking about a bottom. It might not be a bottom you could effectively take advantage of, because it would be a wick bottom and maybe not a consolidation all the way down to these levels. It could just be like a stab down. You know, with all these things that are going on right now, this is not an unlikely event, although it can't be charted right now because we're looking at such high-term time frames that yeah, I mean, the monthly, we're only at the beginning of a new month right now. Weekly doesn't look like it wants to close below this cloud at the moment, and even if it did, we need this Chiku span to also close below the cloud, which is currently sitting at around 33,500 thereabouts, so it needs to close below there to get that short signal. But that's where it would get it, a weekly closure below 33,400, we'll call it. That would be the short signal generated. That doesn't mean it'll come straight down. It's a weekly. It could go back up, get some liquidity, and then go back down, and that could be the big nuke that takes us to this the lower 20s. So again, you've got to look at the bullish and the bearish scenarios. I mean, especially at the moment where there's shorter-term time frames can give misleading hopium signals. Fundamentals seem to be okay. I like the reaction that it had based upon what was taking place in the world, and that does offer some kind of encouragement and hopium based on what's going on. I mentioned on Twitter that Bitcoin is effectively the riskiest safe haven in the world, but it's all relative to your entry point. So obviously the majority of mine was bought way back at the beginning of the bull run, so give or take $4,000 basically. So in that respect, yeah, I mean, it's an okay safe haven for me at that point. For those who've been buying bit by bit and all over the place, maybe not so. Remember what Michael Saylor says, and it is true. Regardless of whatever's going on in the world, the best time to buy Bitcoins always 5 years ago. It's very unlikely that that statement will ever prove to be well, not ever, but for probably decades will prove to be a poor statement. I think that's generally the way that Bitcoin's going to go. But in the immediate time frame, right this very moment in time, it looks like we're giving back all of those gains that were made based on like I say, the fundamental shock in the markets and what we expect Bitcoin to be used for. Now there is another element to this, which is the whole dark side of Bitcoin. And not last live stream, but the one before, I did allude to the fact that there might be some kind of major regulation take place for Bitcoin if it were to be seen that Bitcoin is being used to evade these sanctions in some way. That's also a possibility, and that would have another effect. So like I say, there's black swans circling the charts right now. You can't see them, but they are there in the background, and we do have to be aware of all of those. But remember, black swans do offer amazing opportunities. I've been pointing to the fact that we need clarification from Fed monetary policy to make any effective actions on anything really, and never mind just Bitcoin, but stocks and obviously altcoins and things. We need that clarification to navigate our way through these charts to a larger extent. But yeah, I mean, things are looking definitely a bit fluffy. I've definitely got a large portion of my available capital still ready to go on this, and I'm waiting for the right time. Like I say, I bought out all this area. It's all been bought out, a while ago now. So this zone is all done for me. Whether we go lower or we go higher, it all depends on whether I decide to put more in. But I'll leave it with you there. So that's your bearish scenario. It's worth putting it all together. Fundamentally, Bitcoin's still okay to continue on, but on a technical basis, it's still a risky asset. Stocks falling in Europe, they will fall most likely, continue to fall in America, and that will have a negative effect by default for Bitcoin. But Bitcoin is not owned by anyone particularly. It's traded in Tether, so it does have a response to whatever's going on with the actual value of a dollar. And if everything is going to go into hyperinflation, maybe not hyperinflation, but definitely continued inflation, then you would expect that this to rise anyway. Well, we think about the Dixie approaching particular levels of significance, basically being 100, and then if we just zoom out, I'll finish this video in a minute, I know it's quite a long video, then this is your monthly. This is where we're thinking about an area of resistance around here, even if it's just in the short term. But if we think about this on a much longer term time frames, this is how the Dixie goes, and it is effectively lower high, lower low, continuous downtrend over decades. And this is what Max Kaiser and all these other fanboys talk about. You know, there is a reason to suggest that Bitcoin will continue to go up in value by default, because, well, all currencies go down continuously by default. So, I mean, over a longer period of time, same as Michael Saylor would say, you know, the best time to buy Bitcoin is always 5 years ago. This chart would suggest that the best time to buy Bitcoin is effectively, you know, every 15 years, really. So we are looking, you know, when we look at something like this, the idea of a Bitcoin becoming, you know, 100,000, 200, 500, a million, it's almost a guarantee, to be honest with you. But over what time frame? You know, over what time frame? Well, every 10 to 15 years, effectively, you're going to have one of these major pushes down to make a lower low. And at the moment, what we're doing is we're looking to find a higher low, which could take anywhere between now and, well, the next few years. Either way, I'll stick to my original game plan: accumulate Bitcoin at all costs. You know, through strategic means, but don't focus particularly on how much it's worth on the day. Think about what it's going to do for you in the future. Right, I'll leave it with you there, guys. I won't bother going into the altcoin situation. This is you know, this video's gone on long enough, but effectively altcoins are off the table, although we can look at the Ethereum chart and recognize that we are bouncing from a support, but we're still in a descending triangle, which is bearish, incoming death cross as well. So it does look like altcoins are going to get more hurt than Bitcoin, regardless of the direction that Bitcoin's going. And when I say that, I'm talking about sats being drained out of altcoins. And in a nutshell, that's it. Right, I'll leave it with you there, guys. I hope you have a nice weekend. Take it easy.